Hey there, my name's Curtis Lucas and you're watching Empire Building. So the response to my last video comparing Riot and Mara was encouraging. And there seems to be a lot of demand for good content on these blockchain stocks. So I'm going to continue to expand on that over the next little while because these stocks actually do play a big part of my plan to build out my own portfolio while it grows with this space. A few people in the comments asked me what my 1-year price target was for these companies. And my first response was, my crystal ball is still on back order from Amazon. All I can say is more. Well, it's here now. So let's do this. Yes, I bought a crystal ball from Amazon. Now obviously this is a joke. This isn't how I pick stocks. But I thought this would be a great little prop to have around and have a little fun with it from time to time. So we'll see what kind of trouble we can get into with this thing. It's a lot heavier than it looks. But seriously, there is a simple way to evaluate a company for its fair value. It's called a PE ratio. But for Riot and Mara, they've never made a profit, so they don't have a PE ratio. But if you've been paying attention to the press releases, then you know that's about to change. Both companies have been paying a lot of money lately trying to position themselves for this bull market. It takes a very long time to fulfill such large orders of ASIC miners, and they knew that they needed to have these in place by the time the market hits its full stride. Once these ASICs arrive and are fully deployed, the metrics of these companies will change drastically. To calculate the PE ratio, all you need to do is divide the price the stock is currently trading at by the earnings per share. So since neither company has posted a profit, you can understand why they don't have a PE ratio. But you can use what's called a forward PE, using future forecasted profit. This is far more common with companies that are growing rapidly, much like Riot and Mara are. To calculate the earnings per share once these miners do show up, I started by using the website whattomine.com to calculate what their profits would be after accounting for their electricity costs and assuming for future growth in the difficulty on the Bitcoin blockchain, as well as further price action in Bitcoin itself. And then I remembered that Mara actually published an investor's presentation where they forecasted a gross profit of $6.7 million per month, based on a Bitcoin price of $16,000 and a Bitcoin difficulty level as of November 2020. I believe this to be quite conservative because I expect Bitcoin's price will rise substantially by the time these miners are deployed. Of course, that means that the Bitcoin difficulty level will also increase, but in a bull market, the price can rise much faster than the difficulty level can. In 2017, the difficulty level increased 6-fold, but the price increased 20-fold. I also expect the rate of increase of the difficulty level to diminish because the rate of production of miners compared to the installed capacity will continue to decline. The bottom line is this: using the price and difficulty level of today is a very conservative way of forecasting future profits in a bull market. But we're going to use the profit that they forecasted to illustrate the lower limit of where this price could go. Using the $6.7 million monthly forecast, we get an annual profit of $80.4 million. With the current number of outstanding shares, we get earnings per share of $1.53 per share. If you were to calculate a forward PE ratio using that forecasted profit, you get 2.8. Now that is a company that's priced for bankruptcy. So now all we need to do is assign a suitable forward PE ratio for Mara. Now again, we are going to be very conservative and assign a forward PE of 20. Using that, we come to a price target of $30.54. As you can see, I didn't make any outrageous assumptions in this analysis. As far as I'm concerned, this is what the company should be worth today. But hey, this is crypto, and I didn't come here to make realistic gains and fair market value. I came here for the insane, unrealistic gains and the completely unfair market value. I mean, why should companies like Mara and Riot have a forward PE ratio of 20 when the average PE ratio of the entire S&P is at a 5-year high of 32.4. Tesla has a forward PE ratio of 244. Assigning something like that here, we get a price target of $374 per share. How would you like to 100x your investment? For Riot, using similar data, we get a price target of $385 per share. But the path there will be a violent one, where price declines like the one we saw today will be dwarfed. Do you have the stomach for that? Now, of course, you can trade it, and there will be plenty of opportunities to do so, but you need to be very careful. I've said it before, these stocks tend to misbehave, both in the downtrend and the uptrend. It can be very easy to end up on the wrong side of a trade and then get completely left behind. And then you'll stand in disbelief at what's happening in front of you. You'll say to yourself over and over again how much better off you would have been if you had just left it alone, rather than trying to time this market. Now, don't get me wrong, I am not saying don't trade this market. I myself have traded this market and will continue to do so. What I'm saying is, be modest about it. If you haven't seen my video about the origins of Warren Buffett's famous quote, I would highly recommend that video. But the context of that quote came from his 1986 letter to Berkshire Hathaway shareholders. Common stocks, of course, are the most fun. When conditions are right, that is. When companies with good economics and good management sell well below intrinsic business value, stocks sometimes provide grand slam home runs. But we currently find no equities that come close to meeting our tests. This statement in no way translates to a stock market prediction. We have no idea, and never have had, whether the market is going to go up, down, or sideways in the near or intermediate term future. What we do know, however, is that occasional outbreaks of those super contagious diseases, fear and greed, will forever occur in the investment community. The timing of these epidemics will be unpredictable, and the market aberrations produced by them will be equally unpredictable, both as to duration and degree. Therefore, we never try to anticipate the arrival or departure of either disease. Our goal is to be more modest. We simply attempt to be fearful when others are greedy, and to be greedy only when others are fearful. Although Warren Buffett doesn't share our views on cryptocurrency, his investment mindset is undeniable. And he would be the first to admit that he never invests in anything he doesn't understand. And it's no secret that he's never really been able to navigate the technology sector. All this to say that this party hasn't even gotten started yet. The overall markets don't even have these companies on their radar. And I haven't even addressed the fact that $1.53 per share earnings is laughably low. I think it could reach levels closer to $3 to $5 per share based on the math that I did on whattomine.com. So use your imagination, and it won't take much to see that we are sitting on a potential gold mine. And there will be major investors who would love to acquire your shares for pennies on the dollar. Don't give it to them. Otherwise, you may be forced to buy those shares back at a hefty premium. I'm going to leave it there for this one, but I've got a lot of ideas for future videos. So if you enjoyed this content, then please tap that like button and share this video with anyone you think would enjoy this content. And if you haven't already done so, be sure to subscribe to the channel. Now, let's get back to empire building. Bye.